Ladies and gentlemen, boys and girls, Vishal Thakkar again, your finance guru. And this time, the topic of discussion is the most sacrosanct topic in the world. Robert Kiyosaki, a well-known author of various books, including the most famous Rich Dad, Poor Dad, has said that if you understand cash flow statement, you will never be poor for life. Now, if cash flow statement is so very important, why is it not taught in schools or colleges? In fact, current education system across the world does not teach people about money or cash flow. And I am yet to fathom the reason why. Probably they think money is the root of all evil or something, I don't know. However, not knowing cash flow can be seriously hazardous to your financial health. So here we go. Today, in very brief, I will explain what cash flow is and how cash flow works. Friends, in my best-selling book Finance for Non-Finance, there is a complete chapter dedicated to cash flow where I have very lucidly explained that cash flow is a function of human activities. And the same parallel is drawn in case of a company. So when a company prepares a cash flow, it looks at the activities which are carried on by its people inside the organization. So now there are so many activities which are carried out. However, we focus on three primary activities which decides whether the cash is flowing in or cash is going out and what happens when cash flows from these three activities. So which are these three activities? Activity number 1, financing activity. Activity number 2, investing activity. And activity number 3, operating activity. So let us understand how money flows. Money comes in and money goes out from each of these activities. So if we talk about financing activities, there are certain transactions which a company does with people who finance the enterprise. So correctly, owners and lenders are the primary people who transact with the enterprise and who, when they give in money or when they take out money, those activities could be safely classified as financing activities. So if I were to give you example, it could be capital introduction, it could be taking of a loan by the company, it could be repayment of capital, it could be repayment of loan, or it could be interest paid to the lender. So these are the 5 crisp examples of financing activities, of which first 2 are predominantly cash inflows, because capital introduction means money coming into the enterprise. Taking of a loan also means money coming into the enterprise. But if you look at the last 3, they are predominantly cash outflows. Capital repayment to the owner, loan repaid to the lender, or interest paid to the lender. Incidentally, the 6th example also could be dividend paid to the shareholder. That is also one of the primary cash outflows under financing activity. Let's go to the next one, investing activity. So investing activity, as the name correctly suggests, mostly has cash outflows but also sometimes has cash inflows. Where all a firm invests? A firm usually invests in purchasing fixed assets or investing surplus money in areas where the money may remain safe and earn something more. So let's look at fixed assets. Any cash outflow in buying new assets, be it land, building, plant, machinery, furniture, fixtures, vehicles, would classify as a cash outflow from investing activity. When you sell an asset and you recover some money, that would be a nominal cash inflow. If you talk about investments, investing in shares, mutual funds, fixed deposits, bonds, etc. are cash outflows from investing activities, and when you redeem those or when you earn interest or dividend out of those are cash inflows from investing activities. Now, finally, let's go to operating activities. Operating activities are related to day-to-day operations of business. So all your revenue transactions, for difference between capital and revenue, there is another video which you can go through. But for revenue transactions like money paid for rent, salary, day-to-day expenses, electricity, internet connection, etc., are all cash outflow from operations. Cash inflow would include money received from sale of goods or services. So these are predominantly operating activities. But apart from revenue and expense transaction, all your working capital items like changes in stock, changes in debtors, changes in creditors, changes in your bank balances, they also are a part of operations. So every company, when it prepares a cash flow statement, it factors cash inflows and outflows from all the three activities. To that, they will compare the opening and the closing cash balance to make a statement, wherein a reader of cash flow statement would come to know that where all money has come in and where all money has gone. In fact, if you look at your own personal cash flow statement, your activities will decide where money comes from and where money goes. So if you are an employee, your money comes from salary. If you are a businessman, your money comes from profit. If you are a philanthropist, your money comes from donations and grants. And also, the type of nature or hobbies or passions you possess decide your cash outflows. So if you look at your expense tracker software of your credit card, and if you see there are many swipes happening for wine and dine, then it clearly shows that you are more into partying activity. If a lot of outflows are seen on apparels and shopping malls, then it shows that you are a person with a lot of shopping therapy activity. So basically, your activities decide your cash flow. And once you master the art of reading cash flows, as Robert Kiyosaki says, you will never be poor. All the best. Keep watching our videos and don't forget to subscribe our channel, Finance Tube. We all know that people from non-finance background struggle to manage their finances. They hit the reality when they get their first paycheck, and from then on, they are all by themselves to manage their money on their own for lifetime. It's like asking you to fly a plane without any formal training. It's very risky. So our endeavor through our books, our videos, and all other mediums is to educate you financially so that you don't outsource managing your own finances to somebody else and suffer because of inefficiencies of other people. One of the best sellers and the fourth position on the bestseller list, Finance for Non-Finance. Yes, ladies and gentlemen, I'm going to give you some legal tips on how to save tax.